Good evening and thank you for making time to join us on Sunday Interview this week. My name is Vivazio Zulu. Now, Monday 31st October 2016, Zambia joins the rest of the world in celebrating World Savings Day, whose commemoration dates as far back as 92 years. But statistics show that Zambia still lags far behind in achieving acceptable standards when it comes to domestic savings. On Sunday Interview today, I speak to Mr. Leonard Mwanza, Chief Executive Officer at the Bankers Association of Zambia, who looks at the need to save and other economic and financial issues in the country. Mr. Mwanza, welcome to the program.
Thank you, Vivazio. How are you?
Fine, thank you. You are coming from the Bankers Association of Zambia. It's an association that has been around,
yes,
but few people know about it. What do you do as a Bankers Association of Zambia? You regulate banks, you protect banks' interests?
Nice question. First of all, we are an association. We're a membership-based kind of organization. We represent the common interests of the 19 registered commercial banks in the country. And as you know, where there's competition, with 19 members, we've got top-tier banks, medium-level banks, and those we can call the new entrants or those who are playing catch-up within the market. So it's quite a competitive industry. So we look at the common interests of the banking sector, and the membership is drawn from the 19 registered commercial banks.
So clearly you're not there to regulate, but just to
No. The aspect,
discussion.
Precisely. The aspect of regulation is for the central bank, the Bank of Zambia, or other regulators like the Securities and Exchange Commission, but our principal regulator is the Bank of Zambia. So in terms of regulations, policing, checking what's going on in individual banks' books, that's a preserve of the central bank. We exist as an association. So we basically look at promoting the common interests of our membership. We promote the integrity of the financial systems. We promote the efficiency of the payment systems. So we look at the interests of the customers. So our core principles are policy influence, advocacy, financial inclusion, and financial education. And I'm glad to be here to talk about one of the most important things banks do, is looking after people's money, and we need to encourage people of Zambia to save.
Now, you've spoken about two interests, and I'm wondering which one are you protecting, the consumer's interest or the bank's interest?
We do both. I think from a policy advocacy, we look at the interests of in the environment in which the commercial banks are operating. So that's one of our primary interests. But we also look at the interests of the customers. Are banks giving the right services to the customers? Are they operating within a common banking code of conduct? We have a signed banking code of conduct, which every bank has subscribed to follow. So if a particular bank, for instance, is not following certain rules within the banking code of conduct, and a particular customer has an issue with that particular bank, we also exist to listen to the customers and to help them to resolve some of those misunderstandings. So it's on both ends. We look at the interests of the commercial bank, but we also look at the interests of the general public, the customers in particular, to make sure that, first of all, there's efficiency on the market, the payment platform are secure, they are transparent, we offer the solutions that people want. So those are the things we debate about. How can we galvanize banks to make sure that they offer innovative world-class products? I think those are the things that we look at.
For the past few weeks, and probably it was as we drew closer to the World Day of Savings, that's 31st, Monday, tomorrow.
Yes.
You're advocating savings as a very key issue and very important issue for the nation. Let me ask one straightforward question. Why should I save?
Well, that's a very, very good question. And you put it right that the world at large has been celebrating the World Savings Day for 92 years, starting from 1924 when the first European Savings Bank had a World Congress in Milan. And then they decided and realized that it was important that we celebrate the aspect of encouraging the public to save. Now, if you go into the European markets, they've actually achieved their milestones. Almost every adult in Europe has an account or a savings account. They are saving one form or the other. So when you look at savings are extremely important because they build prosperity at individual level, they create wealth, they give you a peace of mind. It helps you to plan for things that you may anticipate or unanticipate. So when you save, it helps you to plan for your tomorrow. We can't tell what happens tomorrow. But with savings, you're able to anticipate whatever might come through. You cannot tell what happens. but you can also tell how you want to live tomorrow. How do you do that? You can start putting money aside in a small way and save for a goal. So you don't just wake up and say, I want to start saving. You need to have, what is your ultimate goal? What is it that is troubling you that you need to achieve in life? At what stage in life are you? So for instance, if what is troubling you is you want to be a landlord, you want to move away from a rented home, you need to look at how much am I paying to my landlord on a monthly basis? How do I turn this rental into an investment in form of a house? How can I cut my daily expenses to make sure that I start saving for a packet of cement? I start saving for the price of a plot. So that your long-term goal is to have sufficient resources that will enable you to buy land on which you can build a house, where you can move in and start occupying. So that could be one of your ultimate objective.
So when you're saving, clearly someone should have a goal. But I want to ask you this question. And of course, you're facing a silent force in one way of people that do not want to save. You've spoken about a culture in Zambia that is not very well established, entrenched in terms of saving. But again, you are facing people that are telling potential clients for the banks that it's not good to save because you're tying your money down, and it's not good to keep your money dormant.
I'll tell you, that's a wrong notion.
Savings is equivalent to keeping your money dormant.
Not necessarily. Saving is equivalent to growing your wealth. It is equivalent to preparing yourself for the future. Everyone saves, actually, either in monetary form or in non-monetary form. Let's give it a basic definition. If you go in the life of a villager, for instance, their sources of income or their sources of activity are through agriculture. So they will have a small field where they will grow their crops. What do they do when they harvest? They store those crops. They'll keep the maize, they'll keep the groundnuts, and they'll dry their food. Why do they do that? Because they know that they will need to use these things over a long time. That is a form of savings. They are growing to keep them alive for a much longer period. So even in monetary terms, you need to save so that you can meet the expenses that can hit you into the future. It's not a dormant kind of situation. You need
your money is not active. You give it to the bank, and they keep it for you.
Well, that's a misconception. You need to select the right kind of account. If you select a savings account, negotiate a very good interest rate, then your money will grow.
Do Zambians have an opportunity to negotiate conditions when you're going to deposit in a bank and you want to save, you want to open a savings account?
Probably we should say, do we have those products on the market? Do banks have on offer savings products which are accessible to the public?
Which are negotiable?
Which are negotiable. The answer is yes.
No.
It's yes. There's two forms of savings accounts. The regular savings account where you put your money, you don't withdraw it. There are terms, they give you conditions. For instance, you cannot access those money as and when you need it. So probably they'll tell you can only access this money once in a month, or maybe twice, or maybe once in 3 months. So you build up your investment, you cannot withdraw, there are no charges, and then you negotiate a better rate of return, which in most cases is above inflation. But if you are going to put it in a salary account, for instance, a transaction account, your salary hits the account today, tomorrow you withdraw, what do you see? You're going to see bank charges, and then you're going to complain that I'm not saving. But if you open a specific account that helps you to grow your wealth, the market has enough products on offer. So when you go to the bank, don't just open an account for the sake of saying open an account, because we see that most of the people, their basic need is to open an account through which they should be getting their salaries. They forget that they can actually open a particular savings account that encourages them to grow their wealth. Besides just a regular savings account, they can open fixed deposit account, which in the current market scenario, they are usually matched even with the treasury bill rates. You have the 90-day period fixed deposit rates, you have the 180, which is 6 months, and you have the 1 year, 10-year. And you can negotiate those rates, depending on, obviously, the level of funds that you have at your disposal, which you want to grow. So to say that the money goes and remains idle, that's a wrong notion.
There's another notion here that how can you save when you do not have enough income, and that you can only save if your expenditure is lower than your income.
In fact,
is this a correct picture?
That's not a correct picture. Do not spend first. Start saving first.
How do you start saving when your income is not enough?
The golden rule is first save, spend what remains. And if you do that consistently for a while, you get used. You will not see the pain. But if you get your money and start spending it and expect to save the residues, whatever you may call it, then your mindset is not in the right frame of mind to save. Because the first thing that you're supposed to do, put aside the funds. Whatever resources you have, whatever income sources you have, be it is a salary or be it some resources that you get from friends and relatives, whenever you have that kind of money, the first principle is to say, I have 100 kwacha. Can I put aside a 10 kwacha? The next thing you say, what are my priority areas in terms of my expenses? I need money for food, yes. I need money for talk time, yes. I need money for clothes, yes. But are they really important? You strike out. Don't spend money on impulse. Otherwise, you end up creating yourself or going into a cycle of depending on others. A cycle of always wanting to raise funds to meet the shortfall of your expenses that are beyond your normal income. So I think the best principle, whichever sources of income you have, before you spend, put aside something and start saving. Once you do it consistently for a while, you change your mindset and it becomes a habit. And it becomes something that you do without challenges. But the moment your mind is tuned to spending, definitely your money comes at 16 hours. By tomorrow morning, you would have spent maybe 30% of what you earn in a month. So it's a question of prioritizing your expenditure line. But before you even talk about expenses,
making savings a priority.
Exactly.
But again, people say you never get rich by savings, but you get rich by investing, making your money work. And by saving, you make the bank rich.
That's a very, very serious misconception. If you want to start up your capital, or your company rather, do you go and borrow from the bank? And I think that's what a lot of people think. I want to start a business, but banks are not there to give you the money I need to do my business. That is wrong. You start your business using your own resources, your hard-earned resources. You try it out. When you fail, or if you think you need to grow, you ask somebody else to come and help you. That's why banks come in. They're coming to help you to meet the challenges you are facing, to improve and smoothen your cash flows. So you need to start saving to build yourself to something. We said you need to have a goal. If your goal is to start a small business, you surely are not going to wake up today and walk to any financial institution in the world and say, I have a business idea, this is what I want to do, can I have a loan? No bank will give you that loan. But if you start saving, you're putting money aside in the bank, you're creating a relationship and the historical story of how you're saving the money. Then you can go back at a later time in time to say, look, I've been saving money and this is what I've been doing. I've been running a cantemba, now I want to expand and have another cantemba. Can you help me with some loan? A bank will smile at you and they'll be able to help you because you have shown commitment that at a personal level, I want to achieve this particular goal. That is why the most successful people, they start with an idea which they fund themselves, but over time, what happens as they expand, other people come in and build in on those ideas. That's why you find that the banks will come in to help through lines of credit. If it's on the securities market, you can list your company and you open it up to the public. A lot of people come in and believe in your idea and they'll believe that this is a doable idea, it's a profitable idea, and people get their money, their hard-earned money and put in your company. So you do not start by borrowing, you start by saving. So saving will help you to build wealth. Saving
is a form of investment.
It's a form of long-term investment that will give you a peace of mind.
Are you being unfair by encouraging the poor to invest in savings? And when they save, the same banks create credit facilities that exclude the poor and benefit the rich, benefit the foreign companies.
And I'll tell you that saving is not about being rich. Saving is not about being poor. It is about putting aside the money that I earn. Whether I'm poor, I'm in the low income bracket. Whether I'm rich, in the high income bracket. Do I want to save some money which I can use for something which will come tomorrow? I may fall sick, I may need those funds. I may have a very brilliant a brilliant child who wants to progress in their education. I need to start saving money for them so that probably they can attend the best form of education. You need to plan for your life. And it's not about your level of life or whether you are poor or whether you are rich. That's out of the equation. It's a habit. From your poor level, your low income, you can still put money aside. From your high income, you can still put money aside. And if we all can just start having a habit of saving at what level, it's not about whether I'm poor, whether I'm rich. And by the way, it's not about the poor giving money to the rich. It is the poor building wealth, building prosperity, building a peace of mind, and hoping to attain the same status of life of those that are demand.
It's about the poor giving money to the banks, and the banks creating credit facilities for the rich.
Well, banks exist. We are an intermediary. We receive money from...
The bank exists for the rich.
No. Well, they are commercial entities, definitely. But you see, banks operate to offer a very, very critical service. Banks are intermediaries. They receive money from the general public, from individuals like you and me, from everyone. There's no class distinction there. And where do they take the money? They take them to economic sectors that have got the highest growth potential. So they'll put the money into agriculture, they'll put the money in the mining sector, the tourism sector, the manufacturing sector. Even into your pockets as an individual, you can borrow for whatever activities you intend to achieve. So what comes out of that is that there is growth at individual level, there's prosperity at individual level, but the most important thing is there's growth at national level. Banks are the engine of growth in any economy. The facilities that banks give to key industries create jobs. They create revenue for government. They create prosperity in people's homes, because when people are working, there's enough money they're able to make. They can distribute to so many people. So banks are not there to tap into the wealth necessarily. They are intermediaries which create wealth. They are a store of value. We keep money in a safe environment. The money can grow depending on the structure you want, the kind of product you want, the goal you've set for yourselves. And I think, as I said, you save, you start an idea business. As you are growing, if you think there's a gap, the bank will always receive your application. They will analyze your historical aspect of things, and they will extend something to you to help you grow. So if you grow, you are increasing your wealth, protecting jobs, protecting government revenue, and creating a stable financial system. So it's not about the banks existing to get money from the poor to enrich themselves.
Isn't it about banks having an inherent interest of trying to pull the money from the public and keep it and lend it at a profit?
Exactly. You get the money from the public, from different sources, but obviously banks being commercial entities, they have to price those funds appropriately, because they don't just contract free money. There's a cost to it. And they must pass it on at a premium to make a profit. Yes, they are commercial transactions, and they exist to make a profit.
So as Bankers Association, together with the banks, some people have argued that what you need is not to teach people how to save, but emphasize on entrepreneurship skills so people can make the money and then have enough to save. Look,
it starts with savings. You cannot achieve an entrepreneurial idea if you don't have resources. You run around and you keep talking about, I have a brilliant idea, I have a brilliant idea. This is what I want to do. If you don't have seed money, you don't have a bit of money you can touch on, no matter how brilliant your idea, probably it may not work. Obviously, in some developed market, you have angel investors. There are people who believe in initial ideas which they can fund. But I think our Zambian market is not yet developed to those levels where you have people with enough resources who can fund ideas from scratch. In our situation, I think we need to start from savings. And once you start saving, we should create an entrepreneurial mind. And once you create an entrepreneurial mindset, the seed capital you have, you can now want to expand beyond your level of thinking. How do you do it? You've been saving, you've started a business, you're banking with your bank, now you want to expand. Banks will always come in to help, to provide lines of credit, to help you grow further. And I think that's how it works.
On one hand, you've been promoting the issue of saving, that people need to save. But again, on the other hand, there are a lot of products that are offering people money, and money which they're not using to save or build businesses, but money they're using on consumption.
I'll tell you, I think we've spoken well in terms of what we need to do to save. Consumption is spending. And we spend sometimes on impulse, unplanned activities, to catch up with my neighbor, to do things that everyone is doing. That's a wrong mindset. Consumption should be strictly to things that add value to you. Definitely you have a small portion for food, it adds value. Education for your children, that's an investment, it has value. Keeping money aside for an emergency like a funeral, like medical services, that adds value. So if you are going to consume on things that will not bring investment, or which will not bring value to your life, to your personal life, just know that those expenses, you need to scale them down. Because they're not adding value. They're of no use. There's no need to spend for the sake of spending. You must plan slowly, purposefully, with an objective in mind. And if you do that, it's very easy to come out of it. I'll give you an example. I think nowadays, lunch for the middle class, the materials cost around 50 to 60 kwacha, right? But that's equivalent to a bag of cement. So if
you suggest a forgo lunch?
If you think about it to say, I'm eating a bag of cement every lunch hour, that's 5 pockets of cement at the end of the week. Multiply that by 4 to give you 20 pockets. If you have saved and you're building, there'll be something you would point at to say, probably I've done my foundation, I'm at window level, wow, we are now hoping to roof the house. But it will start from you making a decision to say, from now on, I'll be carrying packed lunch and I need to save a bit of that. And I think you can do that. So it's not about starting from, I need 1 million kwacha, that's when I will save. No, it is about, can I save 20 kwacha every day? From my normal expenses in a day, what can I put aside a 20 kwacha? So that at the end of the week, I have 100 kwacha. At the end of the month, I have 400 kwacha. By the end of the year, 4,800 kwacha in my account, probably with some interest added on top. Then I can have a good vacation, I can have a good Christmas, so I can prepare for the school fees that are coming in January. That is saving. So from within your level of income, at whatever level, I think someone is able to save.
You have been at this this issue of savings, not for 1 year, not for 2 years, for a long, long time, trying to educate the public on the need to save, trying to build a culture of saving. But look at statistics. They still do not look good. Well, they look, in fact, very bad. Well, do you at some point feel maybe we should just walk away from this talk about savings and hopefully hope people one day will remember you?
In fact, we have recognized that the catch of savings, first of all, I wouldn't say it's poor, but it's pretty low.
Non-existent, maybe?
It exists, but at a very low level. If you look at the total deposits base, speaking for the constituents where we belong, the commercial banking sector, we have 11% of the total deposits coming from the savings account. Now, this 11% is a very interesting statistics because when you go into the bank accounts, into the commercial banks and look at the number of existing bank accounts, 80% of those accounts are retail accounts. They are savings accounts. And yet they contribute only 11% of the total deposit base. Then there's something wrong. What I'm saying is you can't have the majority of the people holding accounts in the bank saving the least. In any case, they're supposed to be contributing more. This is by count of number of accounts that are existing within the banking sector, which are around, I think, about 2 million or so. So you are talking about 80% of that number are only saving 11% or keeping 11% of their funds in the banking system. We feel there's something wrong. And we are not going to stop.
Something very wrong.
Something very wrong. And that's the reason why we've said it's time to go out and sensitize the public. It's time to educate the public that saving is a key and important component that builds your wealth, that keeps you with a peace of mind, that helps you to do things in a way you want them to be done.
You're looking at very low figures here, 11%, 12% of savings in the entire country, in the entire nation. What do you think is stopping people from doing what you are preaching?
It's a mindset.
You've preached for a long time.
Well,
You've spoken to people.
I think
the benefits are not bad. Everyone sees them when you say, well, when you save, you're going to build a house. When you save, you're going to have a better future. But people are still not listening. Is there anything, in your view, what is inhibiting people from saving? There must be something.
It's a very interesting question, because an industry that has been existent for the last 110 years in this country. See, the first bank came into this market in 1905. But we are still talking about the poor or the low savings culture. I think there's something wrong. That's why we are saying, let us change the mindset. Let us start from putting aside the little we have in the banking system. Maybe we need to educate people for them to understand that saving is not first having so much money and then you start saving. It's about creating a habit of systematically putting aside some money, and you get used to it. People are not accustomed and used to saving. They are more accustomed and their minds are more tuned to spending. We see more people getting their money and spending it just there and then. And halfway the month, if they are in employment, the language that comes out is, yeah, I'm broke. And then what do? To meet the gap of their expenditure, they are going to borrow. They even borrow for food. They'll borrow for money for transport. They borrow for unnecessary things. The end result is that they go into a sequence of perpetual debt. They get paid, immediately they get paid, the money gets distributed to a lot of needs. In fact, if people were to save first and spend later, they would lead a much better life. What we notice is people actually spend, consume, even before they have their money, which is a wrong way of doing things.
So when the money comes in, you just pay off your debt.
You start paying off your debt and you start borrowing again.
Do you think lack of education is really affecting the drive? Lack of education is
definitely
affecting the banking sector
we feel
in a very negative way.
Definitely, we feel. I think lack of education is a key component. That's why, I think, as the Bank Association of Zambia, working with the Bank of Zambia and other financial market players, we are saying it is time we increased awareness. It is time we brought out the need for people to save, but not just the need. We need to teach people the tips, the important ways of them to save. We need to bring out the information louder and clear and encourage people to change their mindset. That saving should start at an early age. Saving should be a habit. We must all live through this process of changing our mindset, and we should start saving. And I would encourage people like you should actually walk over to any bank now and open an account for your child. Whether your child is 2 months old, or they are below the age of 18, open an account for them, start saving some money for them, so that you teach them early habits of saving at an early age, even before they go into the work, they graduate into the working stream. At least they would have known and appreciate the importance of saving. So I hope everyone, including yourself, will start now rethinking to say, if I did not save at an early age, perhaps it's now, let us start with my children, help them to open accounts. And those products are available. They are flexible KYCs, as long as the parent has guaranteed and signed for the child. You can start saving little by little. By the time your child is ripe to go to the university, probably you have enough money to take your child to the best university you ever wished to go to.
Now, you've been doing this regularly, but do you feel you're not doing enough? Because you do it once in a year, it's become an event, and education cannot be based on an event.
In fact, that's why
a day of savings, World Day of Savings, 1 week of intensified education, programs here and there, school quizzes, and that's it.
You are very right. What we are now saying is that celebrating the Savings Day should just be one of those by-side of things, should not be the core thing. We need to work towards changing the mindset of the people. And the banks now, what has happened is they are ready to go out. In fact, as we speak, most of the banks have been going out to schools, to markets, to community centers, to educate the people, the public, on the importance of saving, using bank services, and to showcase the various products on offer. So what we are saying now is that, first of all, banks are actually churning out products that are responding to the core that maybe people, as you put it earlier, that when you save, you go back, you don't find your money because of charges. Now what you can see is that banks have structured products that are specifically for savings, and there are no charges at all. So we'd like to see the public utilizing more of such products. But above all that, what we are saying, we've galvanized our industry to make sure that they have specific units that go out to educate the public on the importance of usage of banking services, on the importance of savings. So we hope with these interventions, we're not going to be having one-off events celebrating the World Savings Day, probably celebrating the Financial Literacy Week. We want it to be a consistent, year-round kind of intervention. And that's the reason why we have decided, like for Lusaka province, the Lusaka urban, we've discussed with commercial banks who have adopted specific schools where we've put some money boxes where children will be saving for a particular goal. And then those schools have been adopted by these particular commercial banks. The idea is that those commercial banks will be mentoring those schools, will be teaching them on financial literacy issues, so that people, the pupils, will start learning the habit of saving at an early age, setting a goal, saving, realizing that goal, and utilizing those funds for that particular goal. So we want to go out and talk to the people, be as close to the people as much as possible. And the Bankers Association of Zambia has also got an intervention to do with financial education, and we all realize that financial inclusion cannot be attained without a consistent, well-planned financial inclusion strategy, without consistent financial education strategy. That's why if you look at the Bank of Zambia, the Ministry of Finance, we now have the financial education strategy, which looks at how do we sensitize and educate the public on the importance of usage of banking services, particularly the importance of savings.
Why don't you partner, for instance, with the Ministry of Education, try to develop curricula for young children in primary schools and sponsor all those?
We have already done that, I think, through the Central Bank, the Bank of Zambia. The Curriculum Development Center has been part of the development of the financial education strategy in the country. And what we have noticed is that for business studies, the curriculum has really been tuned to the needs of the current times. And I think the issues we're discussing here are now part of the new curriculum. So that's quite a positive step that has been achieved. So for the early learners now, I think business studies now are starting at a very early age, and they're being taught the importance of usage of financial services and the various products. And also banks are going out there to reinforce that message by ensuring that they mentor them, they educate them, and they teach them the importance of the usage of financial services. So it's a collaborative effort, and I think a lot has been done in the background. The curriculum has been changed, and I think schools are now being taught. We hope through that we will galvanize the mindset of the future to embrace the importance of savings.
Let's look at the banking sector generally. We saw a very huge growth at some point, so many banks coming onto the market. But suddenly there seems to be a slowdown. We've not had new banks in quite a while now, maybe 4, 5 years.
Well, we're talking of 5 years, yes, because the last entry into the market was the AB Bank, which came into the market in 2011. Well, I think two things. We are not a very big economy. And I pointed to you that the structure of the 19 commercial bank, we've got the top flyers, the top performers, the middle level, and then those that are playing catch up and doing business. So it's a very competitive kind of industry. So we haven't had a number of entrants. In fact, we've recently been coming out of a merger. I think 2 of the leading banks have merged into one, they're Trustmala.
So are we getting down to 18?
Well, we're getting down to 18, but I think the good news is that we've been informed that there's another bank that will be starting its operation pretty soon. So we'll still maintain the number 19 going forward.
Do you think this is enough for the economy? We've seen economies like Kenya with so many banks, probably over 40.
Look, it's not about the number of banks in the market. It's about are the existing banks offering solutions that are going out to the markets.
Ideally, with a larger number, you would expect good competition.
Well, it's a liberalized market. I would put it that the decisions to enter the market are purely commercial shareholder decisions. The central bank's arms are always open. They are the registrar of banks, so If there are no new entrants, basically it means people are assessing the level of business activity. From where we sit as an association, we tend to get quite a lot of interest from neighboring countries, people coming to inquire about the state of the economy, the state of the banking sector. So inquiries are always on a daily basis, but I think the decision whether to come and set shop within the economy entirely lies with the shareholders. So just to say pretty confidently that at least there's hope now that we are now receiving the 20th bank, since the two banks are yet to merge formally. So once they start operating, at least then after 5 years, we are now looking forward to at least a new entrant.
So did you? I didn't get you clearly. Did you say the 19 are enough?
I would
we
say
still need more?
Not necessarily. What I was saying is that the decision to join the 19 commercial banks square lies in the shareholders' mind.
What do you say on your assessment, based on your assessment, that we have 19 banks, we're doing fine, or we have 19 banks, we still need to do more?
Well, if you look at the structure of the business levels of the commercial banking sector, you have maybe 60% to 70% of the market share being held in the top 6 banks. Then the rest of the 13 banks must share the other 40 to 30% market share. So you can see that the way the market is structured, it's quite competitive and quite difficult to wrestle the business from those top 6 banks. So one would say the market is open, but it's up to the shareholders to come in. But I think if you look at the structure of the banking sector, the last 10 years or even more, it is the concentration is pretty in the top 6 banks. So new entrants have come on board, and I think they've been struggling to catch up to wrestle the business from those top performers. Maybe that's one of the considerations that the shareholders could be looking at in terms of joining the Zambian market. But competition is... So
there could be a bit of a monopoly among the top banks?
Well, not necessarily. They probably could
so
say...
much power?
No, not necessarily. They have a history of royalty from their customers, probably. They have the right strategy, the right balance sheet. So it's a question of having their right strategies. So it's not even a monopoly, I think.
Creating a brand,
they've got a powerful brand that...
They're able to dominate the market?
Yeah, they've got a brand that people are able to trust, but not to say that the other brands are not trusted, because the sector is fairly stable, well capitalized. All the banks are well capitalized, and I think profitable. It's a profitable market, competitively profitable market. But I think the decision in terms of whether they want to enter the market, I think it again square lays on the shareholders.
Like you said earlier, but we still have a huge population still unbanked in Zambia.
Fairly quite right.
Meaning we still do not have enough services, not reaching the rural areas particularly.
To the contrary, a lot of strides have been achieved. In 2009, we were talking of just 37% of the adult population being financially included. We've jumped to 59.3, almost 60%. That's fairly good enough in terms of achievements. These interventions have come from various players: the commercial banks, the other non-banks players, the mobile network operators. So collectively, I think there's been quite a jump in terms of increasing the financial inclusion agenda. But obviously, we can do more, especially when we discuss issues of the quality of usage of these services, the retention aspect of these services, the mindset of keeping resources in these accounts. I think those are the issues we need to be looking at. From a statistical point of view, I think in terms of financial inclusion, we've done pretty well. We are now at 60% of the adult bankable population.
The rural areas are covered?
Yes, those statistics also covers the rural areas. It's across the country. But obviously, in terms of the service touch points in this country, they are traditionally concentrated on the line of rail. You see a lot of dots along the line of rail where there are business activities. Then when you go out of the rural areas, those areas that have a bit of economic activity and a bit of population, again, you find that there's quite some activity, a lot of dots in terms of financial access points. But obviously, the more you go outside those economic centers, it becomes now issues of lack of economic activities, issues of lack of concentration of population, and probably no economic real value to say a bank can go and set up in the middle of nowhere. So I think banks would always follow where it makes economic sense and where activities are well established. So if you look at all the established economic centers across the country, you see quite a very serious representation from the commercial bank and other financial sector players.
So when you look at the strands and types of banks, you have a predominantly commercial bank base, less of savings banks, probably just one government bank. That's it.
Indeed, that's the structure, and even in terms of the market share, the commercial banks control 90% of the financial services assets in the country. Obviously, we have the other sector of the non-banks. These are specialized institutions. We have the savings banks, the development financial institutions, the building societies. They have their own niche and role they are playing, and I think they have their own challenges or strength in one or the other. But we are all working towards a common objective of saying, can we reach out more? Can we bring quite a number of people into the banking or financial services stream? And all of us are working collectively to make sure that we develop products that are suitable, products that are affordable, and which can be accessed by everyone.
Banks have often been accused of probably, for lack of a better word, I could say, of being self-centered, concentrating on cost saving, concentrating on profit, and immediately people deposit their money in these banks. Sometimes people will tell you it's pretty difficult to get your money. You have to queue for hours. Sometimes you actually even have to queue to deposit this money. So service is pretty much not very good on the Zambian front. So many banks, you have to queue for not less than 30 minutes.
First of all, you know, when you operate a bank, there are a lot of issues attached to that. First of all, you need to show that you have got the muscle and the integrity to manage a financial service industry. That's why if you look at the minimum capital required for you to set up a bank, in 2012 it was raised to the equivalent of $100 million for foreign-owned banks and $20 million for locally owned banks. By that time, the exchange rate equivalent it was about 520 million for foreign-owned banks and 100 million for locally owned banks. Now, that's a pretty sum of money that I must put aside as a shareholder to start the business of banking. Then once I start the business of banking, I must make sure that I put in the right investments, I employ the right people, I have the right strategies to grow this resource. There are a lot of requirements on what you need to do from the regulatory point of view and what you need not to do. All these things point to the fact that we all want to have a stable and strong financial system. Because once you have a collapsed financial system, then you create a problem. Yes, banks, when they accuse, it's a sign of good business anyway. That means that bank is...
Not a sign of poor service?
Not necessarily. It means that bank has got enough customers to serve. But beyond that, I think the market has embraced world technological advancement levels in terms of offering products that are innovative, technologically driven products. So we sometimes tend to wonder why people should queue up in the bank to go and withdraw the money, when in actual sense, they can embrace the usage of card payments. They need not necessarily carry cash, because right now the card in your pocket is sufficient cash you can carry to any point of sale, any merchant who has a point of sale, and you can go and pay for your goods and services. So it's not necessary for people really to be queuing up to get money on their ATMs, to be queuing up in the branches. Yes, sometimes you tend to see queues, people depositing, but that's the nature of banking. Where you have more people wanting to access that service, definitely the queues are always there. But what we always say is that every bank have got their own strategies how to unlock that kind of commotion that sometimes you tend to see. And I'll tell you, interesting, you find that most of that commotion you see in the commercial banks is a month-end based kind of commotion. Go there during the mid-month, you find that most banks, it's almost express service kind of situation.
That speaks pretty much to how our economy runs.
Yes.
Most of the transaction is all at the month end.
Exactly. When the money comes in, we all rush to the bank to collect the money and spend it, instead of saving it.
I want you to speak to the issue of interest rates, high interest rates. The banks have been on the receiving end as again failing to reduce interest rates and affecting small businesses, affecting the cost of doing business in the country, affecting the ability of the small-scale entrepreneur to access cheaper financing.
Let me just explain that the interest rate factor is quite a multifaceted kind of issue. It starts from a lot of issues. the fiscal space does contribute issues towards interest rates. The monetary issues, they also contribute to issues of interest rates. So banks exist as intermediaries, and they merely react to what's on in the market. So if we go to sometime end of last year, the central bank tightened liquidity. They increased the total reserve ratio to 18%. Now let me just illustrate that aspect of things. For every 100 kwacha deposit that a bank receives, it has to put 18 kwacha with the central bank, and that money is kept with the central bank, and it does not earn interest. So when the bank is pricing its loans, it has to factor in the fact that for every 100 kwacha I've contracted at an agreed interest rate to that particular customer, I can only invest 78%, is it 82% of those funds? That's one issue. So the tightening of liquidity, the restriction on the open market window, or OLF, created a scenario where there was serious liquidity crunch on the market. The cost of new deposits skyrocketed to as high as 35%. So how do you contract a new deposit at 35% and price it at 24%? It doesn't make sense. Banks exist as commercial entities. They have to make profits. So how do they arrive at interest rates? They will look at what rate have I contracted the deposit. I need to put a margin of my costs. These costs are operational costs. I also need to put a margin on a profit margin so that I can contribute to shareholder wealth creation. Because the shareholders exist waiting to say, I invested money in this particular business. You must give me back my dividend. So you put all those things, banks have repriced their loans to reflect the general situation on the market in terms of the cost of funding. But obviously, as things improve, we always seen that whenever situations improve, there's a reverse effect. I think there was a time when those of you who were there in the early 90s, I think interest rates had gone above almost 150%. But 2 years ago, 2012, we had interest rate as low as 12%, as low as
18%.
Exactly. In fact, they had come as low as 12%. So what we are saying is that when the monetary policies are right, the economy is right, the fiscal spending is put in proper perspective, the demand to borrow by the government in contracting public debt is within margins that are acceptable, and the rate at which they are willing to offer the interest rates on treasury bills, there is a possibility that banks would react to those positive outcomes.
Do you see that happening in the near future?
It's always a cycle. The long-term effect is that this is just a cycle. We are in a cycle where we are in a difficult situation. We've just noticed that inflation has come down from as high of 19% to 12.5%.
This should be a boost to you.
That could have been a boost in terms of, obviously, because the monetary policies are they were set to protect inflation skyrocketing. So where inflation has dropped from 20 to 12.5%, and the initial forecast was that we're going to go into single digit, but I think we may miss that because we've just increased the price of fuel. New subsidies, I think electricity subsidies are about to be reduced, FISIP subsidies. So we're going to see a cost push factor from the drop in subsidies on electricity, FISIP, and also fuel. So probably the year-end target that was earlier on envisaged, we may miss it. But I'm only hoping that probably the inflation levels will not go to those elevated levels that we saw at the end of 2015, which precipitated this tight liquidity situation, which precipitated the increase in the cost of funds on both ends of the coin.
How is this reduction in inflation helping you as a sector?
Look, the long-term effect...
It should have helped you.
It should have helped us.
It should help you.
Yeah, because what would have happened is definitely would have expected that the state reserve ratio, which was a key instrument that the central bank used to contain the escalating inflation, could have been brought to manageable levels. Probably they could have said, we are knocking off 5 basis points from the 18%. This is just
your proposal.
No, I'm just giving as an hypothesis. Definitely, whatever drop would have come in from there, then it would have automatically reversed the level of interest that are currently obtaining on the market. Because once the state reserve ratio is dropped, it goes without saying that almost immediately there's a psychology of reversal of all the interest-related fundamentals. So we could have actually seen that before the end of the year, if the other challenges would not have come in, there would have been a possibility of at least having a marginal reduction even on interest rates, especially seen from the reduction on inflation, because now the target on inflation has come down.
So as what should be done, as Bankers Association, you would propose that statutory reserve ratios are reduced?
No, in fact, what we will propose is this. The monetary policies alone cannot work to achieve any attainable objective of containing interest rates. It takes two issues. On the fiscal side, we need fiscal consolidation. We need government to spend within their revenue envelope so that they avoid coming on the market to borrow and pushing up interest rates.
This is something government has promised.
And this is what, it's a good thing. We've seen serious commitment. The tone is in the right way to say we'll contain, there will be fiscal stability, fiscal consolidation, monetary policy stability. So if we can all work to the promise we've been given, and that we've seen inflation drop to 12.5%, with a rider that obviously it will be a challenge to maintain them at lower levels given the fact that subsidies are now being removed. If we could have seen those lower levels, definitely, I think as we go into the first quarter of 2017, maybe the banking sector would have put a smile on people's pockets by reducing interest rates.
I want you to comment on government's position. They've spoken about a recovery program dubbed Zambia Plus.
Yes.
You've heard about this.
We've heard about it. We've analyzed it. I think we've seen the commitment, the tone, the pronouncement from the minister. From our end, it resonates well with our thinking that containing and managing fiscal consolidation, or to put it in plain language, spending within program levels and consistently doing so, we could have long-term positive effects on a lot of economic fundamentals in the market. We could have a lot of pass-through benefits that could come. But we are all part of it. The banking sector is ready to walk through this process. We are already coming from a scenario where the pain has been quite high. We've talked about, we're coming from liquidity situation which were pretty tight. They've eased out a bit, but not that they're completely out of line. We saw reduced lending because of the low liquidity levels. The increased interest rates created another unintended consequences where we found that non-performing loans were increasing because the cash flow in the market, liquidity just generally is low. So companies are not doing as well as they should do. There are issues of liquidity not being there. There are issues of challenges to do with the weather-induced factors. We're talking of load shedding, which is affecting production capacities. So a company that was operating at 100% right now probably is operating at 50% because of some of these externally induced factors like weather, the global economy, and stuff like that.
As we close, I want you to zero in on one issue, that is this: the Zambia Plus recovery program has 5 pillars, according to the finance minister, and one of them, the 5th pillar, looks at governments intending to prioritize efforts to reduce cost of production and ease doing business, and improve access to credit, lowering lending rates and reducing inflation. I'm interested in lowering lending rates. Are you ready for that? You are basically supposed to start and support the private sector.
It will start with the fiscal consolidation. It has to start with managing macroeconomic fundamentals. So if we can see inflation being contained, being brought down to single-digit levels, if we can see government appetite reducing to borrow at elevated interest rates on treasury bills, if we can see government spending within program levels, then definitely we'll see relaxed monetary policies that have tended to choke the banking sector. You take out all that, the benefit will be we'll start seeing a pass-through effect on the reduction on interest rates. As I said, it's a cycle. Banks will always react to what's happening on the market. So if there's fiscal consolidation or there's fiscal discipline, the level of borrowing or spending of government is within programmed levels, within the resource envelope, then the banking sector will react to those stable fundamentals, and there's a possibility that that cycle can be reversed and we can start seeing positive outturns in terms of reducing lending rates. And it has always been done.
Mr. Mwanza,
you're most welcome.
Thank you so much for coming to the program.
The pleasure is
mine.
I know
World Savings Day is tomorrow, but happy Savings Day.
Thank you so much, and I hope you'll start saving.
Well, you've been watching Sunday Interview, and today I was discussing with Mr. Leonard Mwanza, the Chief Executive Officer of the Bankers Association of Zambia. I'll be back next week at the same time. Pleasant viewing.